Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
Well, welcome, everybody. All right, let's delve right into. You know what we're going to talk about tonight? Believe it or not, we're going to talk about zombies. No, not the zombies that you're thinking about in the movies and Walking Dead and all that good stuff, but just zombie companies. I talked about this a few years ago. We were talking about the zombification of America, and it's more ways than one. But I want to talk about this in terms of corporate America and the fact that we have, and they're still out there. They're still roaming around, zombie companies, the Walking Dead. There's a couple quotes I want to. This is Nicholas Taleb stuff. This is in regards to when you borrow a lot of money or you print a lot of money and there's excess money out there. What it does is it creates this fake prosperity. You import the future into the present. And it's not real, okay? It's not the actual future. It's some bastardized, grotesque silicon version of it. Leverage, when you borrow too much, or in our case, we print too much. What it does is it buys you a small little peek, maybe a glimpse into a prosperity that you haven't really earned. Now, what is one of the underlying themes here? We say again and again and again, week in, week out here on the Watchdog on Wall Street show. It's life truths, right? Truth. Everything in life that has meaning, value, and worth involves work, time, and effort. Because of all the leverage, because of all of the printing out there, well, it's changed. It's changed the global financial system, right? Global financial system, old school Wall Street, old school capitalism. You're going to Wall Street and you want to raise money for your company, or you're looking to borrow money in some degree to help build a company. I'll tell you what's happened. And again, I've been in this business now for doing 3 decades, and it's gotten worse instead of better. Basically, the global financial system, in many respects, how I view it, how I see it, in essence, it's a tool right now for maximizing the number of encounters between the strong and the weak, so the one can exploit the other. Again, Nicholas Taleb, put out some of these ideas. These are ideas that we talk about on a regular basis here on the program. What is the reasoning behind all of these online trading outfits, the constant pressure, the apps, all of these things? It's there to get you, to basically lose your money. That's what it's there for. Back to our zombies, right? Back to our zombies. We still have a market. And I know it's been volatile and things have come down, and certain companies have done, Facebook's done a face plant, and other ones that have gone along with that. I know they've come down, but they're still there. They're still out there. And again, I don't know what the next thing is. They're trying to come up with a narrative now, the next investing narrative. Try herd mentality, trying to get everybody doing the same thing, kind of like the zombies on The Walking Dead. They walk in herds, they go together. Listen, you have to be very prudent right now when it comes to your investment. Well, you always should be prudent. That's just right now. Indices, again, a lot of index funds out there. For the overall markets, I'm going to be honest with you. Overall markets, I see basically muted returns moving forward. Do I see a lot of particular winners in there? Yeah, but that's what you need to do. You have to be very, very careful and selective in what you're doing. Again, you talk about the NASDAQ and how it's sold off. I got plenty of companies on the NASDAQ that have done just fine. This is one of the things that I've discussed again and again. We as money managers, helping people prepare for their lives, we have to deal with the terrain. We have to deal with what's out there. We've lamented here on the program. We've talked about all sorts of problems in corporate America, whether it be the way that executives are compensated. We're not a fan of stock compensation. We're not a fan of stock buybacks. Really not. I guess I get it in some instances, it's okay. But what we're really looking for is we're looking for companies that are actually, they're able to buy back their stock, but they're still spending a lot of money on capital expenditures. They're looking to grow. Because the reality is, if you're not growing, you're not innovating, you are dying. We've got a situation right now. This has been the case for a while. You're losing money in risk with the risk-free investments, CDs, savings accounts, bonds. You're losing based upon inflation. That's the reality. That's part of the terrain. So what do you do? You have to find ways around this. And again, we've talked at great length here on the program talking about dividends. I think last week on the show, we talked about Jeremy Siegel and the fact that stocks have outperformed every asset class ever. Not even close. But the bulk of stock market returns over time have been due to dividends and reinvesting dividends. You don't want to turn your portfolio. You want the markets to be a casino for you. Do you understand? You don't want to be in a guessing game. You don't want to try to decide. Like I said, we talked last week a lot about this too. What's the market going to do next? I don't have a bloody clue. I don't have a clue. But what I'm seeing a lot of right now is, again, we're getting a lot of people signing up for our personal CFO program, many accounts coming in. We're reviewing accounts. We're helping people out. And what I'm seeing out there, and this is human beings. This is how human beings are wired. That the natural tendency is to invest in asset classes that have done well in the recent past. Wow. Because again, they highlight these things. They push you into this stuff. Wow. Look at that fancy pants money manager there with the nice suit on. Look at their performance over the past year. Past year? What about the past 5, 10, 15, 20 years? We don't even look at things. We don't even look at things and strategies and things unless they have a 10-year plus track record. And if they're not 10 years, the strategy needs to be backdated based upon that strategy before the ETF or the fund was started, so we know how it's done over the long term. This is called, have you heard of this? It's called recency bias. Yeah, all this stuff is fascinating to me. Again, it's almost like in my profession here, I almost have to become an amateur psychologist, if you will, understanding human nature. Recency bias. It's a tendency to assume that recent trends will continue. And this happens on the flip side. right? If the markets are selling off, if there's some issue out there, for some, it's going to happen forever. Sky's going to fall. World's going to end. Right. Yeah, again, I said this countless times on the program. You never want to bet on the end of the world. It's going to only happen one time. Got it? It's going to only happen once. Basically, this recency bias, it's exactly what it is. People say, oh, geez, stuff is done well. Wow, look at that. Look at all these tech stocks. Look at all these meme stocks. Oh, wow, look at all these specs. Look at how great they've done. Well, the reality is, people, there's an equilibrium, if you will, or a gravity, however you want to describe it, when it comes to investing. And this applies to any asset class out there. Every single one has an intrinsic value. Everyone. Eventually, they're going to trade for what they're worth. All this performance chasing that we're seeing from people out there, what you're doing, what investors do is they're, in essence, they're buying high and then they're selling low because they got to move on to the next hot investment. This is a flawed process. This will sabotage your retirement plan. You get it? When things back off, when things go on sale, and you can take advantage of high-quality companies, that's when you get involved. But the fundamentals are always the issue. And again, you have to, at all times, be looking at management, capital expenditures, what type of business plan they have. All of these things. This is what works. This is what has always worked. We got a lot we're going to go over on today's program. I'm going to delve even a little bit further into this and maybe even throw some ideas and some things that we've been doing with many of the new people that are jumping on board, signing up for our personal CFO program, getting to our website, watchdogonwallstreet.com. And again, I invite each and every one of you to do so. Get there, watchdogonwallstreet.com. It's one word. Take advantage of all the great stuff we have. Watchdogonwallstreet.com, or you give us a call, 800-471-5984.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
Welcome back, everybody. It is the Watchdog on Wall Street show. Yeah, it's amazing I've had this program for the length of time I had, over 20 years, because the reality of the situation is I'm pretty damn boring. That's right. We are pretty darn boring at Markowski Investments. Yeah. Nothing exciting here, right? We talk about the fundamentals. Okay, we talk about how to make money over time. All of these things, they're not exciting. It's not exciting, but it works. It works. Actually, I'm gonna get into my financial independence top 20 a little bit later on in the program today. I don't know when, but I want to get to it today. And one of the things on that top 20 is when people ask you for investment advice, you bore them. Yeah, that's right. Guess what? It's time to get boring, everybody. That's right, because it works. Nice, boring portfolio. Compounding the best safe yields you can find over time, leading to cash flows that will continue to pour in for years to come. How about that? How about playing the long game as opposed to looking for the hot asset, or wow, that new hedge fund, or that manager is just awesome out there? You know, I watch this now, and I kind of compare it to sports. I'm kind of disappointed. Spring training is supposed to start now. You know, it's kind of, especially now that I'm living in the Northeast, kind of get you looking forward to springtime. I am, excited. My lacrosse season has started for my son who's in college, and I'm going to those games. But anyway, Baseball's changed, and they've in my opinion, it's basically turned into home run derby, and I'm bored with it. So it's bored with it. It's just, it just doesn't make the game what it used to. We don't, going to compare what we're doing. We don't go up trying to hit home runs. Okay, we try to win. Whatever it takes to win. Scratching and clawing out runs. Getting more people on base. This is what we do. This is what we do with people's portfolios, for crying out loud. You're more likely to accumulate wealth over time by playing safe yields than trying to chase the next hot thing. There was a documentary. I don't know. I think it was HBO. And it's probably 3-4 years ago. And the documentary was entitled Becoming Warren Buffett. And in it, he compares his investing strategy to baseball as well. And he actually referenced Ted Williams. In Ted Williams' book, The Science of Hitting, he emphasized the importance of knowing one's sweet spot. And if he waited for a pitch that was really in his sweet spot, guess what? This is the last guy to bat over 400. But if, again, he starts swinging at things that are not in his sweet spot, he probably would have hit 230. The lesson for investors, according to Buffett, is that you don't have to go after everything. You don't have to swing at every pitch. You got it? Again, that whole FOMO, fear of missing out. I'm going to miss out. No, you don't have to swing at every pitch. Don't do that. But things slide all the time. All the time. Slightest inkling, I don't get it. I don't understand. Whatever it may be. That's fine. It's gone. And the point that he makes is, again, a point that we like to make, too. I'm not buying a company. I'm not buying a company, unless I feel that I'm going to own it for at least 10 years. If you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. You got it? Yeah, it's all the long-term plays that work. And again, I explained this here on the program. Your asset allocation will change when companies do well over those extended period of time, and you'll have to maybe trim positions down to size and rotate assets into other classes that might be trading below their intrinsic value. This, again, proper preparation. Proper management of your finances. There is no there's no algorithm, people. There's no algorithm. There's no trick to this. There's no way. There's no shortcut around it. This is what works. This is what always has worked. And again, I know. Not exciting here. Not exciting. Pretty boring stuff. Yeah, and the funny thing is, I know this, if I were to come on program where we're adding new stations, affiliates all the time, and I started promising people the sun, the moon, the stars, and we've got this great algorithm, and we at Markowski Investments can show crazy outsized returns because of our proprietary algorithm and trading strategy that encompasses. If I did that in the program, do you know how many people would be going to our website and signing up for that? Again, people want it quick. They want it easy. It doesn't work that way. And I know, second time I've said it today on the program. Everything in life that has meaning, value, and worth involves work, time, and effort. There is no way around it. Anyway, again, I want to invite each and every one of you out there. And this is, when I mean everyone, okay, I mean everyone. You don't have to have a $5 million account. You have to have $1 million account. I don't care if you're just getting started. We're here to help everyone. That's what our personal CFO program is all about. Take advantage of it. Get to our website, watchdogonwallstreet.com. Sign up for it there. We also have our podcast, all sorts of amazing stuff there at the website. Watchdogonwallstreet.com, our 24-hour-a-day help hotline, 800-471-5984. Don't hesitate, people, okay? This is what we're here to do. Watchdogonwallstreet.com. We'll be back.
You're listening to the Watchdog on Wall Street. This is the Watchdog on Wall Street.
Let's get into financial independence top 20 here, because I saw this story this past week, and this was the headline. Hard times. 7 in 10 Americans say they're living paycheck to paycheck now. Let me be honest. Large swath of my life, I was living paycheck to paycheck too. That's a part of growing and building. You're starting out. You're working 2 jobs, doing what it takes, hustling to make ends meet. So yeah, that's a part of it. But we're saying 7 in 10 are living paycheck to paycheck. One of the things we try to get across to people here is that I don't care what you do for a living. It doesn't matter. Okay. First and foremost, I've done it all. And you can become wealthy. You can become wealthy if you save, if you put money away, if you live within your means. Again, we live in a day and age where we're told that, we got to keep up with the Joneses, got to have this, got to have that. Nation of consumers. Keep buying, right? It's going to make you happy. Going to make you happy. If you have that extra thing here, now you're truly going to be happy. You sure about that? Number one, actually, on my financial independence top 20 is shopping is not your favorite pastime or hobby. Want to guess what number 2 is? When the prices of equities, when things come down, stocks come down, investments come down, instead of getting worried, you sense an opportunity. When stock markets race through the roof, guess what? Then you become more cautious. You get a little bit nervous when things start racing through the roof. One other tip, this is simple. I explain this to kids when I talk to classes and young people about putting money away and finances. Pay your bloody self every single month. Pay yourself. What does that mean? You take a portion of what you make every single month and you put it away. And again, don't go nuts, okay? What I mean by don't go nuts, come up with a dollar amount that is reasonable based upon what you make. Because if you overdo it and you say, I'm going to do this, I'm going to put this amount away. There's nothing wrong with going out, enjoying your life and going out to dinner and doing these things. You only live once. You don't want to make your preparation, your savings, you don't want to make it a chore. You get it? You don't want to make it a chore. So again, understand, know thyself, a little bit of Socrates right there, and put a certain amount of money that you can afford every single month. And it doesn't matter what the markets are doing. Some other things here on our list. Conflicts of interest. Again, this is basically about becoming a critical thinker and understanding the conflicts of interest and the narratives that are being pushed upon you, whether it be in the business press or whether it be by big brokerage firms and insurance companies. One of my favorite ones on my list here is you have greater wealth than your neighbors, and they don't have any idea. when brokers talk about how great they are. I'm fantastic at picking stocks. I know when to guide you into the market. I know when to guide you out. My pricing and timing is impeccable. You're laughing. You're laughing on the inside when they're telling you this. Yeah, it's funny. Conversation this past week. I get pitched all the time at church. You get pitched at church? What? Yeah, all these advised people coming up to how great they are and how great their returns are and how they can blow the markets away. I'm like, are you serious? Not only should you be laughing on the inside, but you should probably be praying for that person because what they're doing is wrong. You laugh when your buddies tell you about some hot new hedge fund that they bought into. Yeah, it's hot. Mm-hmm. The goals for your family, what you want in life, do not hinge upon your portfolio posting double-digit returns year in, year out. You always max out your qualified plans. You realize that television business shows are nothing more than entertainment programming. And the one I mentioned before. Number 20 on my financial independence top 20 list. When people happen to ask you for investment advice, you bore them. I'm trying not to be boring here, people. I'm trying to make it as exciting as I can. Because, again, if you think about it, it is kind of exciting. Because it's all you're doing. It's all we're doing is financial preparation. We're giving you options in life. The ability to do things, go things, invest in things. That's what this is all about. Optionality. I'm going to talk a little bit about that optionality when we get back. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Again, become a part of our family, a personal CFO program, our podcast, account repair kits, all sorts of great stuff. Watchdog on WallStreet.com. We'll be back.
The only man who is taking on the Wall Street establishment. You're listening to The Watchdog on Wall Street with Chris Markowski.
Yeah, little Jimmy. I've got this courtesy me of my dad, Jimi Hendrix. I got this on vinyl. I cranked that thing up. Anyway, welcome back, everybody. This is The Watchdog on Wall Street show. Have you ever heard of this thing? It's called the teleological fallacy. The teleological fallacy. What the hell is Markowski talking about now? It's the illusion that you know exactly where you're going and that you knew exactly where you were going in the past and that others out there have succeeded in the past by knowing where they were going. That's a fallacy. Okay? We talk about this all the time when it comes to life, and this is why I don't even like calling it called financial planning. Financial planning. I bloody hate that phrase. Why? Because it's preparation. It's not planning. We plan. Yeah, and the old saying, right? You want to make God laugh? Want to make God laugh? Tell him your plans. Prepare. So you have options out there when things come in front of you. I can't tell you. Again, I learned this lesson, okay? Learned this lesson a long time ago. One of the greatest examples of this lesson is when I started Markowski Investments. Got to put my nose to the grindstone. Single, I'm not going to date. All I'm going to do is work. A week later, I met my future wife. Again, my plan was I'm not going to date, I'm not going to do anything, I'm just going to work. Well, that got thrown out the door. I talk about this in terms of life. I love travel. I love going away. But when I travel, we go to a certain place, and guess what? I'm not Clark Griswolding it, if you know what I mean. I'm not making a plan and an itinerary and all this stuff for what I'm doing over the course of the day. I kind of let the day come to me. I let the day come to me. What's going to happen? Yeah, it's like, let's see, if you go to Venice, Italy. You go to Venice, Italy, and there's so many things to see. You know what you need to do? You need to get lost in Venice, Italy. You just need to walk around. And if you're able to do this, and I'm kind of trying to make this metaphor for life in regards to seeing everything around you, okay, and taking advantage of the things around you. People, you can end up becoming a prisoner to a plan. It's like when they ask kids, you're starting up your 401k here at your business, and you can be aggressive. When are you planning on retiring? You're asking a 22-year-old, 23-year-old, 24-year-old when they're planning on retiring? Huh? When they're planning on retiring. Is that right, huh? Think about retirement. Retirement is a narrative. Retirement is a narrative, and quite frankly, not a good one, in my opinion. Anyway, we're going to get into that in a little bit. Talk a little bit about retirement and the narrative of retirement and what people are doing. And I got to make plans, and I got to stop at this day. No, don't do that. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com. Don't go anywhere. We'll be back.
Chris Markowski is the watchdog on Wall Street. You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
Let's do some strategic planning. Let's hire McKinsey, and they can do some strategic planning for us. Right. You think I do that for your life, too? Stupid. Let me give you a few examples here, people. Strategic planning. Did you know that Coca-Cola was a pharmaceutical company? Tiffany's was a stationery store. Raytheon actually was a refrigerator maker. Nokia started out as a paper mill. The terrain changes. Ideas are presented to you. Opportunity presents itself to you. You need to take advantage of it. And I love talking about experts and their opinions out there. And again, conventional wisdom is poison. We say that again. And I know I mentioned retirement, the concept of retirement. The commercials are all over the place right now. Fisher Investments, this one, that one. Again, how am I going to do my spin down when I'm retiring? What year am I? Are you? Is this what you want later on, people? Really? Huh? You want to put yourself on a ridiculous budget? Come on. The other commercials I get a kick out of, too, is once again, they brought back the Napa Vineyard commercials. Yeah, they're bringing back I'm retired. I got myself a vineyard in Napa now. Right. What was one of the funny ones from years ago was it was a couple of school teachers. Retired and their vineyard in Napa. Come on, people. Give me a break. Are you really buying into this? Huh? Listen, life's quite the journey. I talked about that article I wrote years ago when my son was toddler, making sandcastles at the beach, and him not giving a darn that castle was going to get knocked down by the waves eventually. It was the process. It was actually doing it and making the castle that was worthwhile. That's what life is all about. You want your preparation. You want all of the things that you're doing to enhance your life. You don't want it to be a chore. And you want it to give you options. Anyway, this is told this years ago, and it makes a lot of sense. Because this is another thing too. I explain this to my kids, how debilitating fear is and fear of failure. You want to know what our greatest asset is? And our greatest asset is as a country is there's no shame in failing. This is what it is, entrepreneurial spirit. There's no shame in failing. You can fail. Again, you pick yourself up and you can move on. No shame in it. We got all these holidays and this day and that day. We got Valentine's Day. What's that, Monday? Yeah, I'm not a big believer in Valentine's Day. I'm not. I'll get into Valentine's Day a little bit later on in the program. America's principal asset, no shame in failing. We need an Entrepreneur's Day. You take a look at missteps from other businesses in the past. It's okay. It's okay. You get it and you move on. And the reality is that you got to train yourself. And I talk about this concept that was put out there. Again, this is a Nicholas Taleb concept, the concept of anti-fragile, where external stresses make you stronger over time. They make you stronger. Stuff that you the opposite. You're fragile, something breaks. And this is different from being resilient, okay? Resilient is okay. You can brush off things. You want all of the challenges that you are confronted with. You want them to fuel you. You want them to make you stronger. And that's how you look at things. That's how we've always looked at things. Anyway, I have to. I mentioned this before. I said I could throw some ideas at people there in regards to some of the things that we're doing here. Listen, there are various different portfolios that we've put together. Again, high quality, fundamentally sound companies. There are certain portfolios that we have that we work with, where again they're putting off a nice yield, and they've been proven over time. Again, everyone's situation is unique and different. And one of the reasons why we don't talk about these things, or the companies that we're buying, or the ETFs we're in, whatever it may be, whatever portfolios you're putting in, is because everyone's situation is unique and different. That's why I don't do this. To all of our new listeners out there, this is why you'll never have me go on. You'll never, over 20 some odd years, 22 years here on air, I've never come on a program and told anybody to buy any particular stock or sell, for that matter. We kind of alluded to some things, but never to buy, because I don't know you. Everyone's situation is unique and different. Everybody has a certain risk tolerance out there, a certain position in life, time frames. This is why you need to get your preparation done properly. This is why we developed the entire personal CFO program. So you have access to us. You have access to our attorneys. You have access to our accountants, so we can help you throughout the entire process, because that's what it is. Stop thinking it was your financial plan. I got my financial plan together. No, this is my process. This is my process. And I'm going to build. And you know what? Throughout my life, I'm going to see where things take me. And I'm going to see where I'm going to go. And I'm going to be presented this opportunity. And you know what? I'm going to be able to take advantage of that opportunity. You know what? There's another opportunity. Maybe I'll be able to take advantage of that. It's a much, much better way than putting yourself down on some sort of Clark W. Griswold. You got to go see the largest ball of twine in the next 5 minutes. No. We're not about that at all. WatchdogOnWallStreet.com, WatchdogOnWallStreet.com. Again, become a part of the Watchdog on Wall Street family. Sign up for our personal CFO program. Don't go anywhere. We'll be back.
Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the Watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
Experts. They got lots of experts. Lots of experts on a lot of these business programs, do they not? A lot of experts. Experts in Washington, D.C. I got experts within the administration. Hiring lots of experts. Right. Whenever I start seeing this stuff, it always takes me back to the end of Raiders of the Lost Ark. Indiana Jones, he's none too happy because the government bureaucrats have taken the Ark of the Covenant, and they keep telling, we got top men working on it right now. Who? Top men. Problem with all of these experts out there, they're PhDs, and PhD in economics, right? All these various different things, and they're going to decide they're going to start managing money, right? It's funny, these experts. It's amazing to me that they don't know what they don't know. Because of, their PhD in finance, economics, you know what they do? They end up building up portfolios that are a hell of a lot more dangerous, a hell of a lot more fragile than anything else. And that's where you get massive blow-ups. Case in point, long-term capital management. Long-term cap. Remember that one? Yeah. Needed a major bailout. All run by PhDs and Nobel laureates out there. Oh, they're so smart. How could they go wrong? Right. Do you remember it was also, they had the, it was a cover of, I think it was a cover of Time magazine, if I'm not mistaken. It was the Committee to Save the World. It was Larry Summers and Alan Greenspan, and I forget who else was on. It's just, come on, people. These are the smartest people. They all know so much. Really? Yeah, remember that testimony Greenspan gave, the financial, after the Great Recession? Now, I didn't realize this. I didn't see it coming. You didn't see it coming? We did. How are we able to see all this? Anyway, when it comes to, I talk about no fear of failing. When it comes to your portfolio, when it comes to your money, or anything else for that matter, okay, you can make small mistakes. Don't make big mistakes, okay? That's what we're talking about with risk management. Do you understand? You can make small mistakes, just don't make big ones. Anyway, I gotta talk about this. The SEC has come out once again, and they're, we declare and we decree we're going to come out with more rules because that's what we need, right? That's what our society needs. We need more rules and regulations. Well, Mr. Markowski, there's going to have more disclosure for private equity and hedge funds, and it's going to be good for investors. Wait a second. Listen, again, you can have all of the disclosures, all of the stuff that you want. But, Forrest Gump was onto something when he said stupid is as stupid does. All of these things that they're looking to get involved in and regulate. And again, okay, people that we don't touch this stuff. We touch this stuff with a 10-foot pole. All this stuff is supposedly out there for what they call sophisticated investors. I know who these people are. If I were to, if we at Markowski Investments start putting our money with some of these managers, some of these private equity guys out there, some of these hedge funds guys out there, I would never have to pay for a vacation ever again. Oh, yeah. Yeah, I used to go to some of the, again, I'm dating myself now. I haven't been to one of these industry shindigs in over 10-plus years. Oh, yeah. Markowski, why don't you come? We'll take you to the Bahamas and we'll, go golfing. What? And that's gonna convince me to put my clients' funds at risk with you because you're going to take me to the Bahamas? But anyway, neither here nor there. This is what everybody needs to know in regards to FINRA, the SEC, whatever it may be. They love their rules, and they'll come up with their rules and all this stuff. But, again, they don't do anything. They're not a cop on the beat by any stretch of the imagination. They're not. Well, one of the rules that the SEC is putting down right now is that if a fund takes large losses, they want the fund to explain it the next day. Really? Really? So you're gonna explain the spilled milk the day after? I don't get it. What's the point behind this? There is none. There is none. So again, people, don't expect, don't think that SEC and the FINRA, that there's some sort of protection for you. They're not. They're not. The thing about securities laws are much like tax rules. They're much like a lot of regulatory nonsense out there. They're not in black and white. They're written in gray. Lawyers love gray areas. Lots of area to swim in the gray areas there, right? A lot of billable hours and gray areas. Simplicity is key. It always is when it comes to rules and regulations. 10 Commandments kind of, pretty much understand what God was getting at, right? This nonsense that they come up with, thousands and thousands and thousands of pages of rules and regulations, has it gotten better? We did have the Glass-Steagall Act until we decided to repeal that. You know that entire piece of legislation? Kept commercial banks, investment banks away from one another. Did a heck of a job for almost 70 years. 70 years. It was about 40 pages long. Since they repealed the Glass-Steagall Act, which is about 70 pages long, 40 to 70 pages long, if I'm not mistaken, how many thousands and thousands of pages of rules and regulations have we come up with to rein in Wall Street, to rein in the abuses of Wall Street? Oh, yeah, Sarbanes-Oxley, Dodd-Frank. Now we got more. SEC's got more. Has it worked? Nope. Credit Suisse. Again, I've explained this before here on the program, and to tell my new listeners out there, you have to understand these big banks and who they are and what they are, what they do. Now, it was several years ago. We were talking about HSBC. They actually were fined a great deal of money because they were the bank for the Mexican drug cartels. Again, I don't know if they still are. They're probably being a little bit more careful because they didn't even give a damn. They actually had HSBC branches where they made the teller window extra big so they could bring in duffel bags full of cash, drug money. This is a major international bank. Huge. Credit Suisse. Credit Suisse is on trial right now in Switzerland for aiding Bulgarian cocaine traffickers. Their money's green, or whatever color, euros, multicolor. It doesn't make any difference. They don't care. You said that they don't look at things. These big banks out there, these big firms out there, they don't look at the morality of anything. You get it? They don't care. And again, why do I bring this up? Well, you might want to understand the motivation of the people that you do business with, you decide to bank with, you decide to have manage your money, because they've proven time and time again that they don't care about this country. They don't care who they do business with. Doesn't make any difference. And they have no gumption whatsoever to just saying, hey, you know what? We can rip off the small guys. Yeah. Again, I got story after story here. FINRA orders UBS to pay $1.9 million over in-house option strategy, which was absolute garbage. Again, UBS. Look at its logo. It's Swiss, and it's got a logo with a key on it. And again, this is the fallacy out there, the expert fallacy. They've got all these experts there that know how to really hedge based upon using options. Yeah, We do this stuff all the time. How is it that a big bank like UBS can screw it up that bad? Huh? FINRA bars a Morgan Stanley financial advisor who decided to take advantage of NBA players. Yeah, we see a lot of this as well. They have certain groups that are dedicated to professional athletes. And I'm sorry, I've got some, but I don't really swim in those circles. I really don't. A lot of the quite frankly, the agents for a lot of these athletes drive their clients in the direction of these guys. And how many messes have we seen over the past several years taking advantage, ripping off athletes? It's sad. It really is. And again, it's time and time again. I got a stack of these things here today. Ex-broker gets 11-year sentence for using clients' money for luxury items and child support. 3 charged with fleecing $40 million from funds that were set up for fraud victims. FINRA bars ex-Wells financial advisor accused of taking part in a Ponzi scheme. I got on and on and on. We could do an entire show just on the stuff that I can grab over the course of the week. You need to understand who you're doing business with. You need to have people that are going to put your interests above their own. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com. Again, take advantage of all the great stuff we have at our site. Podcast, people, growing like gangbusters. Keep it, short and sweet, about a half an hour every single day. Can sign up for it there at our website. Personal CFO program, account repair kits, all sorts of great stuff. WatchdogOnWallStreet.com or give us a call, 800-471-5984.
Bringing America financial freedom one listener at a time. You're listening to the Watchdog on Wall Street with Chris Markowski.
Well, one of the rumors floating around this past week actually helped drive the price up of the stock was that you had potential suitors coming out of the woodwork. Nike and Amazon and some other companies in a bid to buy Peloton. Are they looking at Peloton? They're sniffing around Peloton now that the stock has come down. Why do I bring this up? And we've talked about Peloton and some of these other unicorns, if you will, that are running around. Well, the price came down. The price came down. We talked about intrinsic value. It's priced accordingly. Now, when I made fun of Peloton, and we've done it often here on the program, I'm making fun of it in terms of, well, its valuation, what its valuation was. It was absurd. It was patently absurd. And we knew the thing would come down. This is I talk about when you need to find value. You need to find value. What is something worth? What should that multiple be? Now, we're starting to see this, and there's stories all over it, especially when it comes to homes. Here was one that I saw this past week. Homes are selling faster than ever before, and the spring market is just around the corner. Now, why is this? First and foremost, there's been a pretty sizable exodus out of urban areas, without a doubt. Without a sizable exodus out of major urban areas. And people are going out and they're looking for homes. And there's little inventory at this point in time. In many areas of the country, new inventory has not been able to come online for what? A myriad of reasons. Everything from supply chain issues to the price of commodities just going through the roof. So, again, there's an issue right now where prices have gone up. They've gone up. I kind of put it to you in terms of what I'm up to, Okay, I'll use myself as the example and guinea pig right here. I'm looking to move. Back down. Our main office is in Tampa, Florida. I want to move back down to Southwest Florida once my youngest son is done with high school. The kids are all off to college doing what they're going to do. I'm going to move back down. This is a couple years. So I'm starting to look around right now. Not so much look around for something existing, but something that's going to be built. And because the market is so hot down there in Southwest Florida, I'm taking a look at the prices, and I'm getting pitched by a lot of, the prices are just going to go up. Okay, so they go up. All right, whatever. I know what something is worth. Okay, and I'm not going to overpay. This is one of the things people need to understand. You need to be patient when it comes to this. You need to be patient when it comes to real estate. When you're paying a higher price, at least, if you need to get a home, if you're kind of pressed, family, you have to have a home, you better make sure that you're planning on staying in that place for at least 10 years. At least 10 years. Again, real estate, like everything else, it ebbs and it flows. And certain markets, usually when they say, it's the hottest real estate market in the country, right? Tampa right now, hottest real estate market in the country. That's when things tend to top out, if you will. Anyway, there's a couple of the real estate stories I wanted to mention here as well. Again, this is one big, fat, huge see, I told you so moment. I was getting actual hate emails from various different commercial real estate people in Manhattan because of some of the things we've talked about here on the program and how Manhattan real estate is going to go into the toilet. It's getting worse instead of better. Manhattan retail rents plunge. No kidding. Times Square, it's down almost 40%. Rental rates down 40%. Madison Avenue, fancy pants shopping street, it's down about 20%. And this is, again, unheard of when it comes to New York City. But, again, think about the things in terms of the amount of people that are coming into the city. Tourism is down. Office workers, some are coming back, some are not coming back. Crime, there's a myriad of things. So there's going to be some major changes in those markets. There's also a story as well. Again, it's kind of a follow-up because I talked about this. Right out near MetLife Stadium where the Giants and Jets play, they put this gigantor mall in. And it's kind of like Mall of America in Minneapolis there where it's got rides and whatnot inside the mall. Billions they spent on this thing. And I'm saying in my head, you're building another mall, a mall in New Jersey next to MetLife, and you think this is going to be some kind of destination place? Yeah. They had to empty out. I'm not kidding. They had to make a payment there on a bond. $9.3 million was the interest payment that they had to make. You know how much they have left in reserves right now? $820. Yeah, I don't know how these real estate guys, I don't know what type of Jedi mind trick they utilize to convince banks to finance this crap. I don't know what it is. But they're able to get their hands on so much money to build these things when I would have taken one look at that and said, that's going to fail. That's going to fail. How are you so super smart bankers out there? People, well, maybe they don't care. Maybe they just structure the bonds and they look to sell them to people and they could give a damn. Maybe that's it. Anyway, got to take a break. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com. Again, become a part of the Watchdog on Wall Street family. Take advantage of all of the great stuff that we have at our site. Personal CFO program. Of course, our podcasts, account repair kits, annuity help kits, all sorts of great stuff. WatchdogOnWallStreet.com or give us a call, 800 471-5984. We'll be back.
Doctor, my eyes, tell me what you see. I hear their cries. Just say if it's too late for me.
You're listening to The Watchdog on Wall Street. Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to The Watchdog on Wall Street.
Welcome back, everybody. It is the Watchdog on Wall Street radio show. Yeah, you like those prices at the pump, do you? It's brutal. Yeah, a year ago, what was it? What was I paying? About $1.80. I think it was about that. Maybe a little bit more than that. I over $4 a gallon. Oil over $90 a barrel. And again, I'd like to remind everybody out there that this is self-inflicted inflation. This has no geopolitical concerns. Hurricane didn't come rolling through the Gulf of Mexico. No, this is self-inflicted nonsense. Really is. Anyway, I got to talk a little bit about jobs and metaphors and whatnot. We took a hard look over the course of last weekend and early part of this week at the jobs report for January, and actually did a deep dive into the jobs reports over the course of the year. And I've come to the conclusion that the Bureau of Labor Statistics is garbage. Absolute, utter garbage. Go back. If you don't believe me, go take a look for yourself. Okay? Take a look for yourself and take a look at the revisions over the course of this year. How could they be that far off on their numbers? You know, and I said I was skeptical of the report. You can't believe anything that they're saying. I mean, I got back, went to my last weekend, went to my son's first college lacrosse game, official one, and up in Rhode Island. And every restaurant we went to, taking the kids out to eat, whatnot, all the places we went into, they had signs. Big signs at the hostess stand there. Please bear with us. We have a pandemic of being short-staffed. Things like that. Trying to be clever, trying to be cute. Basically saying we don't have a lot of workers here. We are hurting for workers. And they're telling me that there's all this job creation out there. And then if you delve even deeper into the jobs report, you're like, these adjustments that they're making, the adjustments that they were making in the report, because they have all these algorithms that they use, basically signal that you can't compare reports from this year to prior years, which again is changing the metric. This is the same thing the government did with inflation. You were to go back and use the same inflation metrics that we used back in the 1970s, we'd be running hotter than 10%. That's just the reality, people. It is what it is. I also want to talk a little bit about some, economic metaphors that are being used all the time. Now, again, I've never bought into. We've always made fun of the fact that somehow we're told that low unemployment and higher wages. Oh, that's bad news. Bad news in the stock market's inflationary. Does that make any sense? Think about it. People getting paid more. People are employed. They can spend more. They can do more. Oh, but what about wage inflation? Give me a break. Employers are going to pay what people are worth. And guess what? If the wages come up too much, there's going to be all sorts of productivity gains. There'll be self-checkout lines. They'll find ways around it. That's always been the case. Some of the things, the metaphors that are used by these wizards of smart, you see this all the time on television and whatnot. The economy is overheating. Economy's overheating. Labor market's too tight. Wages are too high. Yeah. Evil. Oh, guys, it's going to be terrible. And this is inflationary. Listen. Oil is inflationary. Printing too much money is inflationary. People making more money and being employed, in my opinion, is not inflationary. I'm going to delve a little bit further into this when we get back, try to explain this to you and the nonsense that's being pushed on you on a regular basis. Watchdog on wallstreet.com. It's what we do. We dispel narratives here on the show. It's what we're all about. Taking the liars, the crooks, the cheats out behind the woodshed and giving them a bit of a beatdown. Watchdog on wallstreet.com, our site. Or give us a call, 800-471-5984.
Lake Charles, Louisiana, little Bessie girl, I want
This is the Watchdog on Wall Street.
Did you see this? These are the people that are running the show. These are people financially. These are people running the show. You had the Bank of England chief come out and tell his countrymen, please don't ask your employer for a raise. No. Please this year, please don't ask your employer for a raise. We got too much inflation out there. The head of the Bank of England. Where did this myth come from? I wrote about this several years ago. The 1958 paper, economist A.W. Phillips. Positive relationship between unemployment and wages. It's called the Phillips curve. He was right that wages tend to rise as unemployment falls, but it wasn't until the 1960s that economists Paul Samuelson and Robert Solow wrongly extended this theory by suggesting a linkage between unemployment and general inflation. This is not true. Kennedy's tax cuts, 1960s. Low inflation, strong dollar. 1970s. Nixon takes the dollar off the Bretton Woods gold standard. Unemployment and inflation rose simultaneously. Reagan, we had tax cuts. Tax cuts that did what? Unemployment and inflation fell through the 1990s as the dollar stabilized. Okay, again, we evaluate economic strength differently from the chattering classes. The greatest economic indicators, along with being the greatest social program, in my opinion, is a strong labor market. GDP numbers, whatever. Yeah, look at GDP numbers. Yeah, trade deficit. We had trade deficit, big record trade deficit this past month. Can people find a job? That's really what comes out. Can people find a job? Yep. That most certainly is the case. You want a job? You can get one. Are wages increasing? That's good too. Again, seems to me if you can answer those questions in the affirmative, I think our country's on the right track. Not a bad thing when that's the case. You see help wanted signs everywhere. Again, it's opportunity out there. Tons of metaphors out there. There was a piece in the Investors Business Daily several years ago that poked fun at idiotic metaphors. Every conversation about the economy invariably compares it to a mechanical device. Ever notice that? When the economy is going well, it's humming or chugging along. When it's not, it's sputtering or stalled. We prime the pump with stimulus spending during a recession and hope the economy will reach what? Escape velocity. Tax cuts and more federal spending can fuel growth or turbocharge it. money gets pumped into it. Economists look for red lights flashing because if the economic engine is revved too much, it could overheat. To prevent this, the Fed sometimes must tap on the brakes. Hitting the brakes too hard, however, can drive the economy into a ditch. Bad metaphors. I understand metaphors being used to help people understand the complicated or abstract. These metaphors are wrong. Bad metaphors leads to bad policy. Again, yeah, are we getting hit with inflation right now? Absolutely. Absolutely. We all see it. We all feel it. Every single time I go to a pump, I can't even believe my oil bill from my house. I take a look what I'm paying for groceries. I get that. But if you think this has to do with the labor market, no, that's a myth. Watchdog on WallStreet.com. Watchdog on WallStreet.com. We'll be back.
Chris Markowski is the watchdog on Wall Street. The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
I make promises here on the program. I say I'm going to talk about something later on in the show, and sometimes I forget. And I've been making a habit to, I make a promise. I'm going to touch on something. I write it down. Valentine's Day. I am the Ebenezer Scrooge of Valentine's Day. I am, and I have my reasons. People, if you need a day. I'm sorry, it's my belief. Tell me to take a long walk off a short pier if you'd like. If you need a day to remind you that you should be loving to your significant other, do something to your significant other, that's a problem. Okay? I'm sorry. Hallmark invented the bloody, holiday. Well, they didn't invent the holiday. There was a, St. Valentine. But let's be honest here. Come on. Let's be honest, silly. Anyway, we got a big national holiday, right? National holiday on Sunday, Super Bowl Sunday. Yeah. And a lot of talk about the commercials, what's going to be advertised. I want to talk about what I've heard. First and foremost, ads are going, they're making a fortune. $7 million per ad. I think it's a 30-second spot, if I'm not mistaken. From what I've heard, there's going to be a plethora of cryptocurrency commercials. Cryptocurrency commercials during the Super Bowl. Yeah, about that. Let me ask you a question. You think that the Europeans are going to start advertising, take out an ad for the euro? Yeah, we're going to advertise the euro, our currency. We're going to advertise it during the Super Bowl. Why, if your currency is so awesome, if what you're doing is so awesome, if it's so fantastic, it's so great, it's so groundbreaking, well, honestly, do you really need to advertise it? Really? Everybody knows what cryptocurrencies are, right? You think that they're a viable form of commerce and transact? Okay. You need to advertise that? Anyway, and again, I get it. I get it when, talk about speculation. It's funny. Sometimes you get these wizards of smart. They'll talk about how they're invested in Bitcoin or cryptocurrency, whatever it may be, when they go on CNBC or Fox Business or whatever it may be. You know what they don't tell you? Is the percentage of their portfolio. I forget who it was some money manager out there saying, yes, I own cryptocurrencies. And, oh, boy, everybody was, oh, look at that. He owns it. Yeah. Made up less than 5%. Less than 5% of his portfolio. Well, you think that they're going all in? You think that they're going all in? No. Sorry, folks. Sorry. Again, people, everyone's situation is unique and different. Again, I don't mind taking a small portion of one's portfolio and speculating on things. I get that. That's okay. But to take a flyer on a made-up currency, again, not going to work out well in the long run. Anyway, I wanted a couple of COVID stories I wanted to touch on today. And this was basically an economic lesson, if you will. I've often talked about here on the program about this concept. It's called the fallacy of free. Nothing is free. Again, I talk about, guess what? We have at our website my podcast. Sign up for that. It's free to you. Consultation with us here, our personal CFO program. We don't charge anything for that. You want to sign up for it, get it out to you. It's free to you. But it's not free. None of it's free. My time is valuable and it's expensive. And the time I spend doing my podcast, again, that's money. Time is money. Not to mention all the work we do, and when people send over their portfolios and they want an evaluation, that's money there. It's not free. It actually costs something. Why do I bring this up? We're being told all the time that, get your free COVID testing. Free COVID testing. How many weeks ago was it Biden was saying, we're going to mail out COVID tests, millions and millions of COVID tests? It reminded me of when Trump was talking about his ventilators. Remember, ventilators, a lot of ventilators. Anyway, here's a story. This is actually Wall Street Journal. My 4-year-old daughter's preschool requires weekly COVID testing. This is Cameron Kaplan, Wall Street Journal. We were told not to worry about the cost. The tests are free. On a recent Sunday, my family got tested at a pop-up tent outside a gasoline station. The sign on the tent advertised, free COVID testing. Free, huh? I didn't pay for these tests, but they aren't free. The cost is billed to my health insurance. A few days ago, I received a routine letter from my insurance company summarizing what it paid. $1,140 a month for my daughter's weekly PCR test. That comes to $285 per test. 20 times the cost of an at-home rapid test. Again, you have all the wizards of smart, all the policymakers out there. Yeah, we're gonna finance all this COVID testing through private health insurance. What do you think is going to happen to your insurance costs? Huh? What do you think? You don't think that this is going to drive the price of this up? Everybody going crazy. I got to get tested. Free COVID testing. It's going to end up becoming a massive racket too. I guarantee you organized crime is taking advantage of this free COVID testing, setting up places and billing your insurance. Mark my words. Watchdog on WallStreet.com. Watchdog on WallStreet.com. We'll be back.
You're listening to the Watchdog on Wall Street. Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the Watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
I talked a little bit about we talked about wage inflation and how I'm just not a big believer that that's the cause of all of our problems. I just think it's absolutely absurd. It's ridiculous as far as I'm concerned. We got, 7.5% CPI print. It's the highest we've had since 1982. We had a tight labor market prior to COVID. Wages were rising prior to COVID. That's a reality. That's a reality. And things are not like they are right now. You take a look at fuel costs, up close to 10%. Fuel costs up 10% last month. That filters into everything. Everything. And what do we get out of the Biden administration? We're going to spend $5 billion on EV charging stations. Honestly, I get it. You want to build out. We want to build out EV charging stations. Quite frankly, I don't know why the government has to do that. I don't. If it was worthwhile, why wouldn't gas stations make that a part of what they do? I don't know. Again, why does the government need to subsidize this? The government needs to subsidize it. I'm not a big believer in it. All of these things, all of this government spending, it's waste. Do you understand? It's waste. We printed over $5 trillion. That money is floating around. That's why there's inflation. This is self-inflicted crap. Anyway, I did last hour, finished up with a quick little COVID thing about the free tests. I did want to touch on a couple of things here. Did you see how that entire report, the entire report that was done, saying that, hey, listen, all of these lockdowns, they didn't work. They didn't do anything. They didn't do a damn thing. It was a complete waste. Did you understand that report put out by Johns Hopkins was completely ignored? Completely ignored. Are you watching right now as the powers that be, the people that have been wrong the entire time, are trying to shift right now the narrative? Trying to shift the narrative when it comes to COVID and the pandemic? I always, when there's something out there that is supposedly new, right? It's new. It's kind of like how they, the Mad Men there. It's new and improved. Do you think that respiratory diseases, pandemics are new? They're not. They might be new to us. Might be new to us and the people that didn't experience the Spanish flu. Or again, there was a bit of a pandemic in the late 1960s as well. Yet we decided, what was new was our response. Was our response to this. We didn't look to history. We didn't even try to understand the past. And if you fail to do that, you fail to study your history, you're just doomed for failure. Everything, waste. Wait, I think about it right now. I think about all of the masks that people have worn. How many masks have you worn over the past couple of years ending up in some landfill somewhere? It's kind of gross if you actually think about it. It depresses me. You see them on the side of the road, and awful. And again, you get the powers that be out there. Did you see the mayor of Los Angeles? Again, they were at the big football game there. Yeah, they're at SoFi. Rams going to the Super Bowl. And they were there at the game, and they're in a luxury box. You had the mayor of San Francisco. Mayor of San Francisco. I don't even know how you have the cojones, okay, to take a day off to even go see a game with the condition of your cities. It's pathetic is what it is. And then you got Garcetti there, and he got caught They got caught taking pictures with Magic Johnson. Gavin Newsom's there, too. All of them not wearing masks. Yeah, Garcetti said. You know what Garcetti said? He said, I was holding my breath during a picture taking. These people say this stuff with a straight face. They say it with a straight face. At some point in time, people, okay, at some point in time, you have to stop voting for ridiculous candidates. I don't care if they're an elephant or a donkey. Doesn't make any difference. I'm not a member of a party. Again, I'm a free thinker, libertarian, believe in the United States Constitution, all that good stuff. But you have to stop voting for ridiculous people because you're supposed to. Because that's the party told me to. No, this person is ridiculous. Anyway, one of the things we try to do here on the program is try to tackle also societal issues, things in regards to our country, the world around us, making this country stronger, and try to come up with solutions to these problems. Again, and these are things that you can talk amongst yourselves. Bring these ideas home. If you want to debate me on this, I'd love to hear what you have to say. And one major hot button issue over the past several years that we've talked about, and I do get blowback from many people on this, is immigration and how we go about handling immigration. What's happening at the border? And it's disgusting right now. It is. It's disgusting. And border agents are getting upset because they know they're releasing criminals into the United States. Well, I want to talk about this proposal that has been put forward by 6 House Republicans. I got Maria Salazar from Florida and 6 House Republicans. They've introduced, and again, this is what the right of center media calls it. They call it an amnesty bill. Amnesty bill for illegal aliens. Can't have that. And then you get the people within the Republican Party. This is a non-starter. We can't do that. Numbers USA, which is a right of center polling group. No, this is out of step. We are in the middle of a historic border surge. And her response is to propose the largest amnesty in history. And I'm going to get into what she's proposing here. And I want you to think about it. Her legislation is entitled it's called the Dignity Act. And it would make anywhere between 11 to 22 million currently illegal aliens eligible for green cards. And eventually naturalized American citizenship. Now, you're calling this, it's amnesty. You're giving it. No, amnesty. Amnesty it's free. You're done. You have it. This is not that. Okay? Before you get your underwear in a bunch, okay, take a couple steps back, take a deep breath, and listen to what they're proposing. This is a 15-year process. You could become a brain surgeon in a shorter period of time than this process. You do understand that. A 15-year process. What it does is this. Okay, first and foremost, it makes all the illegals, it gives them resident status. Okay, resident status to about 1.5 to 3.5 million illegal aliens that were part of that DACA program. Other illegal aliens would be eligible. Okay, follow along here. 10-year work visas. 10-year work visas as long, first and foremost, okay, you have to pass a criminal background check. And you have to pay a $10,000 fine. That's a decent chunk of change. It's not free. Is that amnesty? No, but it's not it. Okay? You're not allowed to receive any public welfare if you are in this 10-year program or you're out. Again, why do people come to the United States? Okay, I've discussed this many occasions here on the program. Why do people come here? You're either coming for work, they're coming for work, or they're coming to get free stuff. Okay? So, again, you're eliminating the free stuff here. You get free stuff, guess what? You're gone. Now, after 10 years of holding your work visa, then you have to go through a 5-year program to secure green cards and naturalized American citizenship. Now, what do you have to do along this 5-year program? You have to take classes. You have to take civics courses. You have to pay more in fines. And you have to conduct community service. This amnesty? You can rob a bank in New York, okay, and you're getting off a hell of a lot easier. It's not amnesty. You're showing you want to be here. And for the life of me, I don't understand why people are against this. I really don't. Part of their plan, too, is also, putting the wall up. Finishing the wall, even though I think that's a waste of money. They also talk about their plan, E-Verify, which we've discussed for a long time, forcing employers to make sure that you're hiring people that have those work permits. People, they're right now, again, there's 2 job openings for every person looking for work. Might we want to fill some of those jobs? Is this so bad? Because, again, what's the status quo? We're going to continue to do the same thing over and over again, expect different results? I think that this 15-year program is a great opportunity to groom some Americans. Again, feel free to disagree. Sound off. Send me a nasty message. Do whatever you want. WatchdogOnWallStreet.com. WatchdogOnWallStreet.com is our site. Again, become a part of the Watchdog on Wall Street family, our personal CFO program, podcast, all sorts of great stuff. WatchdogOnWallStreet.com or give us a call, 800-471-5984.
You should believe in math, not magic. You're listening to The Watchdog on Wall Street with Chris Markowski.
Yeah, it's funny. There's a theory that was. It's not even a theory. Okay, it's not even a theory. It's to me. I equate it again to being young. I keep thinking of kids. Freshmen in college, hanging out the tapestry on the wall in the dorm rooms, figuring out how to save the world, man. We can make it work, man. And I'm talking about modern monetary theory. And one of the biggest proponents of this is Stephanie Kelton. She happens to be a professor at a university not far from where I live there, Stony Brook, not far down the road. Modern monetary theory. Basically, the theory is this. If you want it, government, you can have it. Just print it. Just press print. And she actually had a book that came out. It was called The Deficit Myth. Basically, they were spiking the football. See, look at during COVID, we printed all this money and there's no side effects and we can just spend it on whatever we want. Then all of a sudden, reality came around. Reality came around in the form of inflation. And now they're making excuses for themselves. They did a piece on her. New York Times this past week, and it's funny. Larry Summers, smartest guy in the world, just ask him. Even he came out. He says, I'm sorry to see the New York Times taking modern monetary theory seriously as an intellectual movement. It is the equivalent of publicizing fad diets, quack cancer cures, or creationist theories. And again, you got more and more people coming out and blasting this New York Times piece and blasting this ridiculous idea, this modern monetary theory. And you know what it's become? It's become, guess what? White guys are bad. That's right. That's right. You get the liberal publications out there that love modern monetary theory because, again, they don't understand consequences. They just want. I want this government program. I want more money for this program. I want it. And they just feel that, hey, this is the great way to do it. Just print it. They're all coming out of the woodwork now. Oh, these white males are being critical of this female economist and her theory. What the hell? What the hell does gender have to do with stupidity and bad ideas? Huh? What? We're now moving on to this now. You can't be critical of stupid ideas if they come from some, I don't know, whatever they're calling marginalized this day. Who knows? Anyway, there was a great piece I wanted to share with you. Andy Kessler, Wall Street Journal, and he was interviewing an economist by the name of George Gilder, and talking about wealth and understanding wealth and what is wealth. How to create lasting wealth. How do you create lasting wealth? Well, guess what? You do more with less. Productivity. It's always been true. Always been true. The Industrial Revolution, applying knowledge to replace horses and steam power. We got steam power now. No more horses. Lowers the cost of what? Lowers the cost of clothing. Lowers the cost of shipping. Computers. You got information embedded in silicon chips there. Cheap. They're not even done displacing certain parts of our economy. These productivity gains are the engines of progress. Now, this obviously is against the left's belief that there's a static pie that's out there. This is the old was Alexandria Ocasio-Cortez said it about billionaires. They didn't make $1 billion. They took $1 billion. George Gilder states, he said, wealth is most essentially knowledge. Let's face it. Think about this concept for a second. I thought it was brilliant. The caveman had access to all of the materials that we have today. Therefore, economic growth is what? Learning. Manifested in learning curves of collapsing costs driven by markets. Yet these learning curves get waved away by economists. Information, not materials, drives growth. Another way of explaining this is if you crash a car, the value of the car disappears, but every single molecule is still there. That, again, paradox. Guys like Musk and Bezos and others, that they're just driven by greed. Driven by greed. Right. Again, Alexandria Ocasio-Cortez. You took $1 million. Yeah, and again, you ever notice that all of these people that say that stuff are the ones that are too lazy to go out and start a business, go out and build a business? Capitalism is not chiefly an incentive system where entrepreneurs act in rote response to rewards and punishments like in a Skinner box. It's an information system governed by the unveiling of surprising truths. Innovation. If the creativity of entrepreneurs wasn't a surprise, guess what? Socialist planning would work. Karl Marx didn't. And Bernie Sanders most certainly doesn't understand productivity. Again, this is part of the paradox. You know, you can keep your wealth only if you're willing to give it to others. Think about it. If you have knowledge and capital, the only way to produce wealth is to invest in things that lower cost to consumers and slide down new learning curves. A little bit more on this when we get back. WatchdogOnWallStreet.com. We shall return.
Chris Markowski is the watchdog on Wall Street. bringing America financial freedom one listener at a time. You're listening to The Watchdog on Wall Street with Chris Markowski.
Welcome back, everybody. It is the one, the only, the Watchdog on Wall Street show. We're talking about wealth and understanding wealth and what is wealth. And in essence, wealth is knowledge. It's knowledge. Again, you get the leftists out there. You didn't build that. You took that. They don't get it. They don't get it. Again, I thought that the example was fantastic. The caveman had everything that we have today. Everything, right? What did they do with it? Basically, again, you keep your wealth. You can get wealthier as long as you're willing to provide it to others. Providing something that others will also find productive. The iPhone, artificial intelligence. Entrepreneurs expand their customers' wealth. This is what we call societal wealth. Capitalism isn't greedy. In essence, it's the sincerest form of charity. And the problem we have today is just too much capital gets taken and misused and redistributed before it can be invested and provided in some sort of wealth-enhancing form. I talk about this all the time. It drives me nuts. Drives me nuts. What was this? One of the stories this past week? Yeah, the Biden administration's walking it back now, how they're going to fund crack pipe distribution and other drug paraphernalia. They're spending millions of dollars on this program and billions of dollars on that program and this one. And I look at this and I see these things and I say to myself, you know what I could do with that money? Do you understand the jobs that I could create, the businesses that I could build with that money? When it's spent in Washington, D.C., wasted. So wealth is knowledge. Okay, the biggest constraint of the process of learning is what? It's time. Time is what remains scarce when all else becomes abundant. Fed can print money, but it can't print time. And, he goes on to talk about the zero interest rate policy, and what it does is, in essence, distorts and warps time. We talked about that at the beginning of the program today. You come up with almost a bastardized version of what is supposed to happen. Again, you got to understand here, people, the risks. Okay? The time horizons change when you have a zero interest rate policy, and then, you know what? It makes all of these far-flung ideas, more possible at that time because money is so cheap. Now, what we're seeing right now is the opposite effect on that. You're seeing a lot of these, we call them at the beginning of the program, zombie companies. There's a reckoning that's taking place, and it was inevitable. Gilder concludes his points. He says, money operates as tokenized time and sets the cadence of progress through man's darkness and ignorance into the future. Investing works best when the future is unknowable, as opposed to the past few years when investors assumed that everything is awesome, everything is going to work just perfect, everything is going to be fine. Right. Before what? Before you end up holding the bag, before you end up becoming one of those greater fools out there. We don't want that. So again, you have to look to quality. Look for real. Look for real learning curves, real technology, stuff that's going to make people more productive. Over the long haul, wealth is created by investing in learning, knowledge, and productivity. So we always talk about capital expenditures. Don't focus on the demand side or the supply side. Think of the economy as knowledge-fueled. Ideas are infinite. Supply is infinite. And also, again, despite what AOC says and what Elizabeth Warren says, societal wealth is infinite. WatchDogOnWallStreet.com. WatchDogOnWallStreet.com. Again, take advantage of all the great stuff that we have at our site. Become part of the Watchdog on Wall Street family, our personal CFO program, and lots more. WatchDogOnWallStreet.com or give us a call, 800-471-5984.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
Middle of the road.
The Pretenders. Welcome back, everybody. It is the Watchdog on Wall Street show. Well, the Boston Fed and the folks over at MIT, you've got a model they've put together when it comes to electronic cash. Electronic cash. Again, boy. It's coming. It's coming. And again, what is this going to do, this electronic cash? What is this going to do to all of those payment companies out there, the PayPals of the world and the Venmos and whatnot? The government is going to love this. They're going to love it because they can track everything. I'm going to tell you why this makes me nervous. Listen, you want to have digital currency, fine, but you cannot allow for tangible currency to go away. Once they get rid of tangible currency, and it's all nothing more than blips on the screen, it's over. It's over because they can just take whatever they want. They just take whatever they want in more ways than one. We already got inflation running really hot, and we all know that, in essence, risk-free assets are losing you money. You're getting a negative rate of return on your risk-free assets. You know, a government could, in essence, they could even make it worse. They can force you to spend. In essence, if you can't take your money out of a bank, can't remove it, what if they went to negative interest rates? Saying, hey, you know what? We've got negative interest, lowered interest rates, they're negative. So you're losing money as it sits there in the electronic blip form. And you can't take it out, so they can't take it away. Meaning what? You're going to spend it. It's either use it or lose it. Not good. Not good. Listen, I understand that the technology and moving money from point A to point B and all that good stuff, but we need to continue to have some sort of physical currency. That's for sure. U.S. trade gap swelled to a record in 2021, largest on record. This despite, okay, those Trump tariffs are still in place. Biden didn't remove that stuff, okay? They're still there, and we still have a trade gap. Why? Well, we don't make that much here in this country. I mean, in certain areas we've improved to some degree, but you know it as well as I do. You know, you go to Walmart, you go to Target, you're buying something, looking to buy something made where? Where is it made? Not here, more often than not. That is the reality of the terrain. And quite frankly, if you wanted to open up a manufacturing plant here in the United States, and let's say you were a foreign company, you want to open a manufacturing plant here in the United States, and you're good paying jobs, but you take a look at the current labor market and you can't find the workers, you might set up shop somewhere else because that's something you need to consider. The most small businesses since 1974 are raising prices due to inflation. Yeah, of course they are. Of course. How can they not? again, small businesses bear the brunt of it, to a much greater degree than large businesses do. And it's a simple fact that the smaller businesses, they don't have the purchasing power to negotiate when it comes to suppliers. And they're not going to be spending some of the lower costs that some of the bigger companies are. Not to mention, again, you have fuel prices, all of this stuff is doing a number on small businesses all around the country. WatchDogOnWallStreet.com, WatchDogOnWallStreet.com. We'll be back.
Okay, you know, she used to have to wait around. She used to be the lonely one.
You're listening to the Watchdog on Wall Street. This is the Watchdog on Wall Street.
I don't know. Maybe they'll hold the next Winter Olympics. I don't know. Maybe they should hold it in Chernobyl, in the Ukraine. They can just have it there. Did you watch any? I haven't watched any of it, but I've seen the pictures. Oh my God! Again, you think Winter Olympics? You want the Alps? You want Colorado, Lake Placid, snow? Oh, man. And again, it just shows you how corrupt these international bodies are, whether it be the Olympics, whether it be the World Cup, whatever it may be. It's all about money. It's all about money. And you see the athletes are complaining, the type of food that they're being served and the COVID rules and regulations. Again, nobody's watching. Nobody is watching. They're not even watching curling, for crying out loud. Anyway, I got to get into, I got to talk a little bit about crime. Is file into some of the woke stuff that we're talking about. So, videos. You could do this right now. You could. Oh, it's a quick story here. Back when I ages ago, when I first moved to New York City for the first time. Again, I wanted to see. I did. I was curious. I wanted to see where all of the, like the mafia social clubs were. The Ravenite Social Club. I didn't go out to, what was the one in Brooklyn they had there, the Hunt and Trap. But anyway, go down, just kind of just down in Little Italy, and you would see there's the club and the guys hanging out outside, kind of looking like Donnie Brasco to some degree. Well, you can if you want to watch crime happen right now. I wasn't watching crime. I just wanted to see the mafia social clubs. You can you just go up to any Rite Aid or Trader Joe's or grocery store in Manhattan and just watch people steal. Just watch people steal, because that's what's going on. They just whatever you want, just go take it. No one's going to do a damn thing. This is they were all talking about, we finally got rid of Bill de Blasio. And he was, again, awful. I can't think of, it's hard to think of a worse public servant. It really is. But his successor's most certainly doing a horrible job. Do you know that every New York City precinct except Central Park, crime is up and way up, sometimes doubled. Stores are getting robbed left, right, all over the place. Nothing being done. And you know what it is? You get the stupid governor in New York, and it's just not just in New York. This is in other urban areas around the country. You get the New York governor, Kathy Hochul. No data that bail reform is causing crime wave. Really? Wow. You don't say, because all these people that they arrest for terrible crimes, they've got rap sheets as far as the eye could see. And then, of course, you've got these district attorneys that they're just not enforcing the law. They're not enforcing the law. And again, we're supposed to be a nation of laws. You're supposed to enforce the law. You're a DA. Your job is to enforce the law. If you say, oh, I got prosecutorial, what is it called? Prosecutorial authority, or I forget what exactly Obama said. If I was talking about this when it came to immigration back in the day. Discretion, prosecutorial discretion. Maybe that's the phrase. No, you don't. Like in certain cases, to some degree, yes, but not blanket. I'm not going to prosecute crimes like robbing and stealing. You can't do that, but they're doing it. We're doing it. I say again, I love our country. I love the United States. I love our Constitution. I love all that stuff, but we lost it in many respects. When you have people basically saying, I can do whatever the hell I want to do. No, you can't. It's not supposed to work that way. You know, and the sad thing about this, too, George Soros financed all of these crazy district attorneys. Yeah, he financed all of their campaigns, gave them a ton of money. The guy is, for all intents and purposes, he's basically a Bond villain. He's basically a James Bond villain. But where is James Bond, Felix? They got to do something about this Soros cat. Again, it's right out of a spy thing. We'll infiltrate the country and destroy their inner cities by putting in friendly district attorneys that will let crime go. I mean, again, you could write a script for crying out loud. Anyway, I'm going to pick on California a little bit here. Yes, the Bay Area executives and politicians are calling on their citizens to let homeless people stay in their houses. No, I'm not making this up. That's right. They want the people there to start taking in homeless. Now, listen, okay? I'm all for being a good Samaritan and helping people out. But I'm sorry, I've been to San Francisco. Okay? I've been to San Francisco, and there are homeless that are walking around in the streets, walking around like they're the Walking Dead because they're all drugged out. You're going to allow that into your home? Yeah, we have it now in New York as well, but have these people lost their minds? These are not a family that's down on their luck because their house caught fire or whatever it may be. You're going to let drug addicts and drug users in your home. Do you also have to provide to them free crack pipes? Is that part of the deal too? God bless everybody. Have a wonderful, wonderful weekend. Enjoy the Super Bowl. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Our site. God bless.
Feeling like a dead duck.
Chris Markowski is the watchdog on Wall Street.